Hey, what's up guys? And today we're gonna talk about a topic that's potentially very interesting for some of you at least, meaning how to make an extra $1,000 per month trading Forex. So I will explain key things that are important in planning, meaning we will talk about strategies, trading returns, capital requirements, risk management, and realistic approach, i.e. what your expectations should be. So let's start maybe from the strategy, and this is the first thing that you need to take on if you want to make money. So I have a couple of videos here on this channel about that, explaining more in detail this topic. So overall, strategy needs to give you clear guidelines for entries, clear rules / conditions that need to be met in order to open a trade. And do not get obsessed about that. Don't get into FOMO, whatever you can call it, when you hear or read from somebody that some particular asset is about to go down or up. It needs to be backed by proper analysis. Even if you have the best entries, if you don't calculate risk or exit plan correctly, you'll not get profitable. So here obviously another part of the strategy are exit levels. So they are equally important. Well, we all know that the markets move up and down all the time, so it is vital to know when to enter a trade and how much we can potentially earn to know when is our level where we will close the trade. It concerns bad trades as well. When we have a clear plan, then we know how much we are risking, what kind of decision we are making, and when this decision is considered simply incorrect. So that leads us to the next part, which is a risk management plan. So in this topic I also made a couple of videos about that, how to calculate risk. In a nutshell, you need to calculate the percentage of your funds to every trade accordingly. Meaning, let's assume you trade with one risk per trade. So in one trade, for example, very short-term trade based on M15 time frame, you will have 25 pips stop loss. So the size of the transaction can be 2 times bigger than in a trade based on a bigger time horizon, for example H4 time frame, where the stop loss is 50 pips. It is still 1% of the account, but the distances are different. Also, before you place any trade based on some strategy, you need to backtest it correctly to know the stats of the particular system, how much wins and loses in a row you can expect, what is the win rate, and what are the problematic situations with which you will come across. Maybe sometimes it gives not clear signals, so you need to know how to behave in such situations. Is there any margin for a mistake? Etc. and so on and so forth. Lastly, for the strategy, you need to choose the right one for you. So, for example, if you have a full-time job, you'll not be able to trade very often, so every strategy that involves a lot of time is not right for you. In such situation, it is better to trade strategies based on higher time frames. That gives signals not so much often, and the trade you can take run for a couple days or even week or two. Okay, right now, maybe discuss trading returns. So this is very subjective. It depends more on the risk you are willing to take. If you want to have larger rewards, you need to deal with the bigger drawdowns. There is no perfect strategy that will give you 100% win rate. It is completely impossible. So when you are looking to take less risk, most likely you will see smaller drawdowns and smaller but consistent profits, since trading with lower risk is way less stressful. Overall, you need to have that in mind, that trading is one of the most stressful jobs we can say on earth. But there are so many emotions tied up to money that after a whole day of trading, making decisions, you will feel exhausted. So you can forget about making easy money by clicking on buy or sell on the laptop while sitting on the beach. So although there are ways to do that, but it is almost impossible for a beginner person, and this video is about something different. But going back to returns, as we say, it depends on the risk tolerance. But realistically, we can refer to the most popular benchmark, which is S&P 500. Here we have the fragment of Reuters article where you can read that average hedge fund returned 11.6% in 2020, lagging behind the S&P 500 index 16% gain. So as you can see, if you can make 10% per year regularly, in my opinion, you are considered that you are doing very well. So don't listen to people on the internet that are promising you to make you rich. For example, from $250 they will make you 5,000, etc. Although it is possible, but it is not sustainable, meaning for 100 of people they will take money from, maybe one will succeed and 99 of them will lose their money. And it is a big if and a big maybe. So it's like a lottery. If someone is promising you things like this, it should be a huge red flag for you. Next thing that needed to be discussed are capital requirements. So it is obvious that to make money in the financial markets, you need to have money in the first place. So let's discuss this short table. As you can see clearly, in order to earn $1,000 per month, it will require at least $10,000 capital with a realistic approach. But maybe if you are making better returns, it would take a bit less initial investment to make this sort of returns. Also, it shouldn't be discouraging for you if you don't have such an amount. If you know your craft, you take less risk and you'll reinvest your earnings. It is just a matter of time when you'll be able to reach this level. So key is the patience, regularity and discipline. Don't get tempted to raise the risk and increase the lot size, because this kind of approach will shortly destroy your long time hard work and simply erase all earnings in the best case scenario and cause frustration. As you can see, it gets easier along the line. The more money you have, the less percentage you need to make in order to get this $1,000. Also, you can say, okay, why do I need this a couple of $100,000 when I just need a couple thousand and trade with high risk? If I fail, then I fail, right? So here the psychology gets on the line. It is almost impossible to stick to the plan where you have 50 to 60% drawdown in one moment or got 8 bad trades in a round. I say this from my own perspective. I was such a person a couple years ago, and I know how much it costs to make such mistakes. Believe me, it is better to learn from other people's mistakes than from your own. So as you can see, the more money you have, the easier it gets. So as always, the beginning is the hardest. And realistically, if you will be able to make 2% per month on an average, this is very good. And going further, let's check some other numbers which might interest you. So how the returns look when you have different amounts of money. You need to have that in mind, that maybe it would take you a long time to make such an amount like $500,000, but if you are able to provide repeatable returns and stable profits, there are many prop trading firms, investment funds that are willing to fund you, and therefore you will be able to scale up. But you need to show at least 2 to 3 years of consistent profit at least. Firstly, you need to give something, which is work and learning on how to make such returns, and then you can expect something in return. The rest will follow, so don't be discouraged. The point where you should start is not to put all your life savings and hoping that trading will change your life. In the beginning, you need to have another source of income that will let you learn trading. It will bring too much stress to your life if you invest all the money you have saved and suddenly see that you are not making any money for a year or 2 years straight. That is the reality with which we need to face. So in light finance, for example, in most countries you have a cent account available. So what you can lose then is just your time in this case. It is like in most things in life and in business that you need to put an effort in order to make something significant. There is a quote, a bit popular one, I guess, that when something is hard to get or hard to achieve, it is something that has a value. So what you need to do in order to succeed is always improving, learning new things, new approach for analysis. You see that the market is constantly changing. Right now, many of the old correlations between assets and market situations don't work. For example, you see we have a clear rise in inflation, but gold is still relatively cheap. And it doesn't show clear signals of going upwards significantly. So you need to look for other dependencies. Remember not to rely only from trading results. It will be too much for you, too much for your head. Okay guys, I think that will be all for this video. If you did came this far, I guess the like would be no problem for you right now. And if you want more content, then just subscribe to this channel and follow Light Finance on Instagram and TikTok. I'm posting there as well. So till next time guys, goodbye.